Welcome back. We're expecting a decline at the start of trading this morning. Take a look at futures indicating a triple-digit loss following the president's speech last night. He addressed the nation on the Iranian conflict. The Dow Industrials right now down about 515 after the last couple of days of rallies. The S&P down 86 and the Nasdaq is down 1 2/3%, 408 points lower. Oil prices are the problem. They are jumping again this morning. Brent crude surging better than 6% right now. Take a look. Brent is up 7 1/3% as markets brace for further disruption. The price of Brent is at 108.55. Crude oil, meanwhile, up almost 8%, as you can see there, surging as well. The president said that the conflict is close to ending while signaling openness to a ceasefire. But he also warned that there will be fresh strikes in the next 2 to 3 weeks if a deal is not reached. Watch.
We are on track to complete all of America's military objectives shortly, very shortly. We're going to hit them extremely hard over the next 2 to 3 weeks. Yet if during this period of time no deal is made, we have our eyes on key targets.
And those key targets he's referring to are electronic and electric sites in Iran. And tanker traffic through the Strait of Hormuz remains largely halted, keeping supply fears front and center. And joining us right now is Pacer ETFs Distributors President Sean O'Hara. Sean, good to see you. Thanks very much for being here. How has this impacted your business in terms of individuals wanting to buy stocks?
Well, good morning, Maria. Thanks for having me. You know, what we've seen is a pretty dramatic shift, if you will. For the last couple of years, it's all been about mega cap U.S. stocks. And so far this year, it's been the opposite of that. We're sort of coming out of a very heavy momentum and low quality period in terms of the factors that drove the market for, you know, the 22, 23, 24, 25. And we've now shifted to a market that's rewarding quality and value. And so we've seen a shift in the behavior of the flows of our ETFs accordingly. And then we've also seen a major pickup in international and global. You know, we are probably underweight as a nation, if you will, across the board, the advisors we work with, international for a while, mostly because we were so overweight large cap US. And I think that valuation difference in the performance is sort of leading people in that direction as well.
And the International Energy Agency is warning that the oil supply crunch could worsen in the month of April. It's considering another strategic reserve release. Would that help in terms of sentiment in the market? I mean, the Bank of England has warned that the Iran conflict is adding to inflationary pressures and tightening global conditions. But the president's been very clear that this is going to be temporary. And yet we've got other markets that have been impacted. Dan Yergin, energy specialist, joined me on Monday, and he mentioned helium as well. Watch this.
Is the destruction on this vast amount of infrastructure that is so critical to the world economy that the Iranians have been attacking up and down the Arab side of the Persian Gulf, and repairing that is going to take time. It's oil, it's natural gas, it's petrochemicals. The list goes on. It's things that people don't think about. Helium, which is used in manufacturing semiconductors. And another one is fertilizer. The Gulf is a major source of fertilizer, aluminum. All of those are being hit, and that means disrupting supply chains, sending prices up, and particularly right now, Maria, hitting hard at Asia, because Asia has been so dependent on oil and gas flows from the Persian Gulf. But it's going to radiate around the world, and you know, you see that you pointed to that gasoline, 1 cent less than $4 right now in the United States.
Well, I'm glad you mentioned Asia, because there are all. Sean, your reaction here, there is a global helium shortage emerging as a new choke point for chip makers. Suppliers are warning of cuts and surcharges after strikes on the Qatari energy facilities, which account for about 1/3 of the global supply there. Have you seen an impact?
Yeah, I mean, you know, it all sort of centers around one thing, and that is, you know, the price of oil and the ability to move those materials through the strait. And until that gets settled, I think you're going to see lots and lots of volatility. You know, we've been sort of up and down and up and down. We've been as high as $118 a barrel on oil, and then all the way back down to maybe even the high 80s or low 90s, depending on what the outlook is for how effectively we're going to be able to solve that problem. That to me is the administration's biggest potential weakness, is that if we cannot solve this, then I think we're going to go back to an environment where we're going to have inflation pick back up. You know, the helium thing, it's kind of interesting. You know, we all think of helium in balloons, I guess, but in reality, it's a big part of manufacturing and chips, as your guest said. Some of the disruption in prices there are probably driven by what's going on in the Strait, but there's also a massive amount of competition on the chip side in terms of manufacturing, especially given that the hyperscalers are going to invest somewhere between $3 and $5 trillion to try to build out their AI data center and obvious data centers. And obviously, chips are a big part of that. So you have a supply-demand problem on both sides of the equation. The supply-demand problem for the oil is basically that choke point in the Strait of Hormuz, and then the supply-demand problem is really dual with regard to the helium side of it, because there's a massive amount of demand that's being created for good reasons, but there is a supply disruption.
All right, Sean, we will keep watching all of that. Thanks so much. There was definitely a firmer tone for stocks. Do you think this decline reverses that? Real quick.
I think, it's going to take some time. I mean, we go through crises all the time with,
Right.
and sooner or later the market goes up. 8 words describe the stock market: the advance is permanent, all declines are temporary.
Sean, thank you. We'll see you soon. Sean O'Hara. We'll be right back with Representative Darrell Issa.